Good morning. This is Greg from Master Trader. Here at Master Trader, we make things simple so you can profit in the markets. Today I'm going to go over a concept of trend following, and we're going to do it without drawing any lines on our charts, meaning diagonal trend lines and Fibonacci lines and any moving average crossovers and anything that could add to it being complicated. We're going to make it super simple so you can understand it on anything that you're looking at. So I'm going to start with the Dow here. And this whole idea of trend following is something that you already know. And think about what is an uptrend. And we all define it as higher highs and higher lows. And once it no longer meets that definition, it's no longer an uptrend. So now we have to define each piece of the trend to say what are these little parts of the trend that define what it is that create it. And we do that by first defining a turning point between the shifts between supply and demand. And how do we do that? Well, if you look at a chart, whether it's a bar chart or a candlestick chart, you're looking at some kind of lines like you have here. Right? And at some point, prices move down and they begin to move back up. So all you have to do is define this line right here and ask yourself, when you're looking at your chart, does it have 3 higher lows to the left and 3 higher lows to the right? And we don't even have to care how it forms. I know that's a squiggly line. Your charts probably don't have that. I paid extra for the squiggly one. It could look like this. 3 to the left, 3 to the right. Now we have a pivot. Now, as it continues up and down right here, so here, right, just take my word for it, there's 3 on each side and 3. As it pivots, now we have a trend of pivots, higher highs and higher lows. And this one here becomes what we call major support. And if prices break down underneath it, major support is violated. The trend is over. Now, if you're a trend line drawer, you're one of those guys like you see on CABC with his finger against the screen drawing fancy lines across, you don't need to do that, because every time prices break below major support, the trend line is crushed, broken. Prices go under it. The trend is over. No need to draw lines. Okay, this is kind of children's play from connecting the dots in the book your mom gave you. We don't need to draw diagonal lines. All we need to do, really simple, we just look to the left and see where the prior pivot is. So here I have the Dow on a monthly chart, a weekly chart, a daily chart, and an hourly chart. Even if you started from 2009 and you started tracking those pivotal points as they went up, you followed the trend for a number of years, and then here in 2015 or 16, we got a break of the trend. And it was like, okay, let's short it up here. And you would have made money. But then it reversed deeply into the prior high. This is where our retracement concepts come into play. And then it consolidated in a bullish way. Right? That's bullish price action right there. And then it accelerated further. And continue. And notice the wide range bar. And we're at the end of the month. Wide range bars after multiple bars moving higher do suggest a rest. And here we see the pretty fast run on the weekly time frame. And yet notice last week was a narrow range bar after this move. So it might be ready to rest. The daily's been going sideways. And while this isn't a pivot, we do have a minor line in the sand right there in the Dow. But the question is, can it get above these highs? And on the hourly chart, even if you thought last week the market was going to pull back, it kept trending higher. Here was a day where it was in question, but again, our retracement concept brought it right back up to the high. So at this point, which way is it going to go? We would have to then go and look at this morning, and we see, I'm going to switch to the futures, and we see that they're here consolidating down a little bit, but still above that little shelf of support. We've got a narrow range bar, so we easily could break below a prior weekly low because of the narrow range bar, and that would create some type of a pullback. So guys, that's a little lesson in trend analysis. I'm going to be doing a webinar tomorrow at 4:30. I'm going to put a link down below where you can register, and I'm going to teach you a whole lot more. And Dan is going to teach you a whole lot about how to take advantage of these kind of situations where we eventually see changes in trend, or we're in a trend, and how to make money from it in a simple way. Come to the webinar, learn, get registered, and we'll talk tomorrow.